Hello people, this is Dr. Wang here recording. Welcome to Chapter 2, the Financial Statements chapter. This chapter is together with Chapter 3 for financial ratios in the same module on the Canvas. As you could see, I have posted the PowerPoints for the two chapters and also assignment 1. The assignment number 1 basically includes the basic Excel operations to construct the financial statements as well as calculating the financial ratios as indicated in the first two questions here. And I'm going to start the chapter by working on this Excel from your textbook. Actually, that is strictly your question number 1 in the assignment. So you're going to download the Excel file from the Canvas. As you can see, this is the Excel file with the code name XLSX. This is for Excel. You download it and then you open it, and this is what you see. So this is the Excel file we're going to work on for the assignment question. And there are the balance sheets, as you could check. It's right here. And you also see the income statement. You also see the statement of owner's equity. And you also see the statement of cash flows and so on. So the requirement from the assignment is to fill in the Excel formulas wherever possible in the spreadsheet. All right, and I'll give you an example. For the total current assets of 2016, the newest year, you're gonna input a summation formula of Excel. So if you check the Excel formula right here, if you look at the balance sheet, it's right here. It is 1550. And if you double click on it, it's just show a number. As you can see, this is a formula bar for Excel. There is just a number, and that is not good enough. I want you guys to put in a Excel formula right here. I put a sum standing for summation. As we all know that the total current assets is a summation of all these sub items from a cash, short-term investment, account receivable, and inventories. So I just circle all of them, close the parentheses, and then hit enter. Although the output is still the same number, but you would see I have built a formula behind the result. And that is what I want to see for your assignment submission. And not only you need to do for this particular cell, but also for all the other cells wherever possible. Of course, some cells we're gonna leave it as it is. For example, all of these numbers are given information, and we cannot do much about it. So we just leave it as it. But for the current assets and for total assets and for the total current liabilities, and this could also be calculated, and we're gonna put some formulas behind it to show that we have the knowledge of how to construct the financial statements. For what it's worth, the entire spreadsheet, including this balance sheet, income statement, and all the others, is directly coming from your textbook. So if you got lost somewhere, you can check the textbook for more detailed information. All right, let's get started. So I have checked all the items for the total assets, actually just the current assets, so they all have to be summed up. And then I need to work on the previous year of 2015. I can just use the summation function again and select all the included item, or I can just drag the previous cell by one column to the right, and this could do the same work. Okay, so that's called a dragging technique. Basically, that's about duplicating the same formula with different reference cells, and I highly recommend you to do that. And if we keep moving down, you will see the night plan and equipment. Actually, this textbook put it as one single item. It should include two items, which is the total fixed assets and the accumulated depreciation. So accumulated depreciation should be a negative asset. So that's why we call the total of them net plant and equipment. So we don't have the separate information for the fixed assets and the depreciation, so we just leave it as it is. So there's no needed for formula. But for total assets, I'm going to put the total current assets plus the net plant equipment or net fixed assets, and then I'm going to drag it all the way to the right. As you can see, both columns have the formulas plugged in. And then I check my total current liabilities. That includes accounts payable, notes payable, this is a financial security, accruals, that's about unpaid bill, rent, wages, and this is the total current liabilities is the summation of all these three. All right, hit enter and then drag it by one column to the right. You can see the formulas is plugged in there. And then we have the long-term bonds. We don't have much information about it, so just leave it as a number. For total liabilities, it is the total current plus the total plus the long-term bond, and then just move to the right. And you also see the preferred stock shares in a dollar figure and common stock shares in dollar figure, and we don't have information, so we just leave it as. And for retained earnings of 2016, the newer year, then it should equal to the old retained earnings plus the net income minus dividends. And that's the formula for our retained earnings. And where does the net income come from? It comes from an income statement. So if you check the income statement, you scroll all the way down, and you will see the net income is underneath right here. You gotta click on it. I want you guys to pay great attention to the formula bar right here, just in case you get lost. All right, and also I need to subtract the dividend paid in this year. So where is the dividend paid? You see it right here. Common dividends is $50 million, $1,000, whatever. Just deduct that. And then you have the retained earnings here. All right, so retained earnings is a very important concept. So the retained earning for 2016 equals to the retained earning of 2015 plus the net income of 16 minus the dividend of 16. So you need to know this formula, and in your exam, I will test you on the calculation of retained earnings, and I will not provide the formula for this because the definition of retained earnings is such an important concept in the corporate financial world, and you need to memorize it. All right, so just to put it right here, this is a solid requirement out of you to memorize the definition of retained earnings. And retained earnings is just like years and years of company's savings from its profit, which is represented by the net income. And the net income, part of it will be paid as dividends to the shareholders. They're gonna spend the money for their own consumption, and the rest of it, net income minus dividend, the rest of it will go to the retained earnings. And retained earnings is like a company's saving account. The company will keep saving the profit and use it for future business expansions. Just like we all have our own bank account, so our balance this year equals to our balance last year plus the salary we make this year minus our expenditure we had this year. All right, and then we move down to the balance sheet. So for your total common equity, it is the common stock plus the retained earnings. So the common stock is how much the book value is when the stock was first issued. And it just maintained the same level because there's no new issuance of stocks during the 2 years. So it's still the same number, and this is the book value stock. I'm not talking about the market value, which is you heard all the time, every day, the Dow Jones, NASDAQ. No, I'm talking about the book value of common stocks. All right, and then for the previous year, I just drag it by one column to the right. Okay, so for total liabilities and equity, this equals to the total common equity plus the preferred stock, all right, and then plus the total liabilities. Okay, and then drag it by one column to the right. Okay, so now I have finished the formula construction of all the items in the balance sheet. As you can see, when I drag it, some of the border got eliminated, but don't worry about it. I can just select the whole thing and then do the outside borders, and then it got recouped the original format. All right, so now let's work on the income statement. So the income statement basically starting from the net sales and all the way down to the net income. So net sales is your revenue. And the first thing you're going to deduct it is the cost of goods sold, or the variable cost for selling your products. And you also have a depreciation and amortization, which is not a cash item, but we still put it in our accounting system. And you also have all other operating expenses. So the very first formula you're going to put in here for income statement is EBIT, earning before interest and taxes. And we also call this operating income or operating profit. So this is the income or profit from the operating side, from selling things and having all these expenditures. So it equals to net sales minus the summation of all the other three types of expenses. Okay, then drag it to the right. And you also have interest, and I know that interest is charged upon the liabilities, but we don't have the interest rate, so I can't calculate the interest. So just do nothing for the interest. And then I'm going to use the operating profit minus interest as my pre-tax earnings, or EBT, earning before taxes. And then the tax is levied. It is a 40% tax rate. So we are given the tax rate on the table above. It's right here, 40%. Just to click on it. I want you to pay attention to the formula bar. I have a click on the 40% tax rate. And then I'm going to put the star key and use it multiplied by the pre-tax earnings. All right, so this is the tax level I pay. So basically, that's a 40% of the pre-tax earnings. And then I have the net income before preferred dividends. So it is pre-tax earnings minus the taxes, and then drag it to the right. And the preferred dividends are paid to the preferred equity holders. It's a given information. I cannot calculate it, so just don't put a formula there. But for net income available to common stockholders, that is the previous net income minus the preferred dividends. And then drag it. All right, you also have this additional information. So common dividends should be given, and the addition to retained earnings, that is the net income available to the common stockholders minus the common dividends. Okay, then drag it to the right. For the number of common shares and the stock price per share, actually, they all given information from the above cells. Still, I want you guys to put a formula in there because I want you guys to show where it comes from. First, for the number of common shares, I want you to link it to the above cell. It's right here. And then hit enter. So it's still 50, but there's formula. And then drag this to the right, and it's linked to the given cell. And then for stock price, we do the same old trick again. Make it link to the stock price right here, 27, and then drag it to the right. All right, so now we need to do some calculations. Earnings per share, as is given here in the formula, is the net income divided by shares outstanding. So I'm going to use the net income, it's right here, divided by the shares outstanding. Then drag to the right. And the dividend per share, I'm going to use the dividend, which is right here, divided by the shares outstanding. Then drag it. The book value per share comes from the common equity from the balance sheet. So it is right below the retained earnings. you see that the common equity includes both common stock, which is the original book value when the firm first issue its stocks, plus years and years of savings of a profit, which is retained earning. Okay, so that's actually a summation of a two item, and then use it divided by the number of shares. Then drag it. Okay. Now let's work on the statement of a stockholder's equity, and it comes from all the equity items from the previous year, and then all add up to the items in the new year or the current year of 2016. And for the preferred stock in the previous year, I still will link this cell to the previous financial statement in the balance sheet. So it is a 100 preferred stock in 2015, and then hit enter. So there's a formula built behind it. Well, you probably get tired of moving up and down to see the reference cell and then put it in a new location. And here is something I can teach you to do it in a more efficient way. So the Excel has this function. Just hit this button called View, and then I want you guys to create a new window. And upon clicking this new window, you will see the same Excel file in two windows. Okay, you see this is window 1, window 2 right here. And then I want you guys to hit View again, and then hit Arrange All. And I want you to arrange the two windows in a vertical way so you can see both of them at the same time. So on the left window, you can show the statement of equity holder. Okay, and on the right window, you can feel free to check the reference cells. It could be in the balance sheet or somewhere else. So I think my head is blocking your view here. So let me just zoom out myself. All right. So let me just repeat what I just did. So for preferred stock within this new view, I can just link it to the preferred stock in 2015 right here. Then hit enter. And then for common shares, it is right here. Okay, it's given information. And for common stocks, it is still in the balance sheet. You just pick the number from the balance sheet. And retained earnings, again, it's from the balance sheet. Just link it. And for total equity, you're going to use a summation of all of them. Actually, it's not summation of all of them because the common shares should not be added in there. So I will just add a preferred stock plus common stock plus retained earnings. Okay, well, it's hard for me to click, but I can input its column letter and row number. That's a G102. And then I got a 1400. And for the net income occurring in the new year, so we have a 220, and that comes from the income statement on the right. And it's 220, it's right here. And you also have a cash dividends, and you have to put a negative sign in front of it. I'm not sure if you can see it very clearly, but I did put a negative sign in front of it, and then I link this common dividend. All right, and for the total, you just sum all of them, but there's nothing to, there's only one thing to sum, so just to do it, then you drag it down. Okay, it changes the formula, I don't want it, so this would be equal to the previous number. All right, and for the new balance in the new year, then it would be the starting balance plus whatever changes here. Select all the 4 rows at the same time in one column, and then you just drag it all the way to the right.